Mohammed Chaudhary, leader telecom at PWC, joins us on the show. Mohammed, hi, morning. First, let's start off with what can happen today at the e-com. In case the reserve price suggested is out, your views on reserve price, and do you think the cabinet is likely to go with the e-com's decision? What kind of a hit do you expect on tariffs to negate this high reserve price?
So I think we'll have to wait and see what the EGOM comes out with. What is clear from the assessment that we have undertaken of the proposed prices is that it will almost certainly have an impact on tariffs, mainly because the industry is not in a position at the moment to absorb any of the additional cost increases that will be associated with spectrum extensions and indeed spectrum refarming costs, simply because the industry's economics are too poor at the moment. So we would expect a fairly significant increase on tariffs, and in some parts of the country, such as in metros, those increases would be quite significant.
What is your base case assumption for the reserve price?
So what we've done in terms of looking at the reserve price is we've looked at the recommendations that have been made by the TRAI, that came out about 2 months ago, and then the revised views that came out from TRAI at the end of last week, and we have basically assessed that and looked at what that means for the industry. So we've not come out with a view as to what the reserve price should be. I think that's a matter for the government to make a decision on. But we're very clear from our assessment that the prices that have been suggested will be unsustainable for the industry to bear. They will result in tariff increases for consumers. If, for example, the prices suggested are put through, then the amount of debt which the industry will need to undertake will be very significantly above what we have already. Current debt levels are at 185,000 crore. We now expect that the full funding requirement by 2015 would be over 650,000 crore for the industry, which would be very significant. So it's clear to us that the reserve price does need to be at a level that enables players to come to the auction and use market forces to determine what is the right level at which they wish to pay.
So do you think the industry can pass on this kind of a hike with volumes getting impacted at the current juncture?
It's a very difficult one to call because clearly, tariff decisions are commercial and they do have impacts on people's usage and consumption because of elasticity. Particularly in India, where elasticity and sensitivity to price increases can be quite high for certain services. So really, what we're saying at this point is that, look, if there's going to be this type of spectrum cost impact, then the logic tells us that since the industry can't absorb it, it will have to be reflected in tariff increases. And when you add the tariff increases based on the cost impacts, and then add back the additional surcharges and taxes, it does actually result in fairly significant tariff increases. And we reckon that those tariff increases would therefore be somewhere in the range of 40 to 45 paisa per minute, on an average basis for the country, if you look at voice tariffs. And that's very significant. So really, I think the main message is that we don't really believe that the industry should be pushed into that direction, because it won't be healthy for the operators, or more importantly for the Indian mobile phone users. It will really not be healthy. That I think is very clear from the assessment that we've done so far.
So what happens in case refarming is suggested, and what kind of a hit then you expect for the industry to take?
Yeah, so refarming is now a point that's been introduced into the dialogue by way of the latest documents that came out from the TRAI last Friday. Refarming basically means that operators will be requested to vacate spectrum in the 900 megahertz band and to move to the 1800 megahertz band. And that will basically mean that they will need to dismantle networks, they will need to reinvest in putting together new networks to service the 1800 megahertz requirement. It also means that they will actually have to build a lot more sites. The reason for that is because the propagation properties of 1800 megahertz are a little bit weaker than 900 in many parts of the country, and therefore we estimate that in addition to the roughly 280,000 sites that we have in India today, the industry will need to build an additional 170,000 sites on top of that in order to make the move associated with refarming. And that will then come with its own capital expenditure costs for transition, as well as additional operating expenditures as well, not to mention the additional costs in fuel consumption and the impacts that will have, on the environment and on mineral resources and so on. So really, we see the refarming angle now introducing a further layer of cost over and above what we've already seen with respect to the spectrum pricing recommendations that have been made already.
Fair point, Mohammed. Really appreciate your time and thank you for your robust, solid, and good insights.